I'm actually much more of a modest guy living in Belgium. But I'd like to start with a very first question as an opener. Because when I ask executives in the banking industry what banking is about, very often they tell me it's about realizing dreams. And I would like to ask all of you to raise your hand if you agree with that. Do you think that banking is about realizing dreams? Well, you can think about it or you cannot. I think it is about realizing dreams. And one moment, this should not be my next slide. Okay, so it is. Anyway, so I believe banking is about realizing dreams. And the reason is that banks allow people to expand possibilities in life through financial intermediation. But much more than that, they also allow you to pay with one card, with one mobile phone, or as you heard earlier, with one truck everywhere across the world with just one token, one card. It's thanks to banks that you can buy a house with the money that you'll earn in the coming 20 years. It's thanks to banks that young entrepreneurs can set up a business with money they never earned yet. And that is why I kind of agree with this. Now I'm gonna have to see whether the order of my slides is not 100%. So I'll go back now and briefly explain or share who I am. Because I heard from the questions that Andrew asked up front that I'm a pretty new face here, and I understand. I'm from Belgium. I am the founder and managing director of the banking scene. That is a banking community across Belgium, Netherlands, Luxembourg. I organize events for the banking industry, mainly out of a passion for banking. Events, they cause me kind of stress. There's a lot of hassle, a lot of things that go wrong, etc. But I do love the conversations. I do love the panels. I do love the prep calls, etc., where banks share what banking is about. I also set up a LinkedIn group, Innovation in Payments, back in the beginning of my career, a valuable source to ask all my stupid questions to smart consultants. Today, coincidentally and organically, they grew to a 132,000 community and the world's largest payments group worldwide. Since early this year, I'm also the author of a book. That's really exciting. For years, people did ask me, when are you going to write a book? And I never really saw the sense of writing one. After all, what hasn't been written before? And writing a book is quite a big investment. But then in 2023, something changed. I organized a couple of conferences themed the new ethos in banking. And I asked many executives like the CEO of the Luxembourg Bankers Federation, the European Banking Federation, many CEOs of other banks and executives from banks in Netherlands, Belgium, etc. And I gave them the floor to share their view, their vision on what ethos in banking could mean. And that made me think. And that made me realize that banking is much more than just money-making machines. As we said before, it is also about realizing dreams. And the realization of those dreams go much further than these simple individual aspirations, because it has a ripple effect on society at large as well. Just think about the mortgage, as I gave. You could see it as yet another sales made, yet another credit sold. But looking further, having a person own a house versus renting a house gives him much more connection with the community. They will be paying more taxes. They will be more eager to, for example, invest in the house for higher sustainability reasons. Same with an investor that a bank is willing to fund or provide a loan to. That will hopefully lead to a better business, which again contributes to the community, higher employment rates, etc. So in a way you could say that, well, Astrid shared, banks' actions today, they kind of influence also, in a way, how society looks like in 10 years. With that responsibility also comes let me, with this influence, I mean, comes a lot of responsibility. And very often we tend to forget about that because we are always transforming. We are also making sure that we achieve those day-to-day goals, etc., often sales targets. And in that written, we often forget what banking is essentially about, as we saw ahead of the global financial crisis. Not every bank was at fault, but the entire industry suffered because, after all, if money lets the world go round, then probably banks are the veins that let that money flow. But once those veins clog, we have serious problems. And that metaphor is, I think, a very good example from what happened in the global financial crisis. The industry seemed driven solely by the bottom line, forgetting what their customers truly needed, but also creating new lucrative products that weren't always at the best of society, and ignoring fraudulent red alerts, as some of the examples that will give later will show you. And that led to the fall of trust and the rise of a new idealistic breed, and probably also the reason why you and I are here. Fintech companies. They believed they could do better. They believed that they could do different. And can you blame them after hearing the 65 billion Ponzi scheme by Bernie Madoff in the past? Can you blame them, for example, after the $3.7 billion settlement case by Wells Fargo for consumer abuse through mismanagement and misconduct of auto loans, mortgages, and deposit accounts? Can you blame them after the fall of Lehman Brothers that took the entire industry with them? And one last example, can you blame them after HSBC's support in the past of the Mexican Sinaloa cartel, leading to a close to $2 billion fine in 2012? Banks became greedy. It was never enough. And if the market didn't grow fast enough, they would create new markets, build new products, new services. And they got lost in their own complexity. The banking industry lost its ethos at a moment when society relied on them more than ever. Given the complexity of banking and the constant change, trust and confidence in a bank are vital. And that means that as a customer, you need to be able to rely on them for their care of financial well-being above what is required by a bank's good behavior, above what is required by law and regulation. That's also what Jerry Girbik, the CEO of the Luxembourg Bankers Association, explained at our events. Today, banks are working on regaining that public trust, and they're facing the difficulty in doing so because there's one hard truth. Trust is not something that you can build. Trust is something that is granted by others based on consistent actions over time, long time. And so coming back to the topic of this presentation, what comes top of mind when you hear new ethos in banking? I'm not going to ask all of you, but I did ask the audience at our big conference in Brussels in 2023. And these were some of the answers that were given to us. Very hard to read here, but all relevant topics that are being discussed in my book. But to my surprise, and I didn't notice it myself that day, it was a few weeks later that an American on social media said, hey, ethics is not in that list. Ethics is indeed not in the list when we ask people, what do you think, or what comes top of mind when you talk about ethos in banking? That may come as a surprise, but on the other hand, maybe it shouldn't, because those are two completely different things. For me, ethics is a set of moral principles or a system of moral values for a particular society or an institution. That defines on a societal level how we look at good and wrong. Ethos, on the other hand, that is for me, well, literally the guiding beliefs and values that distinguishes a person, society, or an institution from others, or the color that you and I give to those ethical principles in our day-to-day behavior, and maybe also in what we do in our day-to-day life. Now, in my book, I go one step further, and I link it to what Aristotle once explained as the rhetoric triangle. Um, Ethos, about the credibility. In rhetoric, it's said to belong to the audience. In that sense, a bank's ethos is also how it's being perceived by the outside world. A lot linked to trust. Logos, that provides local support for the message. It's about being capable of explaining what you're doing in a very rational way. Translating that to the bank industry could also be linked to explainable AI, to how do you conduct risk management, AML and compliance, etc. It's a whole rational aspect of banking. What we think is often what banks are best at. Pathos then builds on an emotional connection with the audience. Pathos is to what extent do you feel what your customers need, and to what extent are you capable of building the services that they are expecting instead of just building something that you hope to be able to sell. I see that some of the fonts in translating to PDF have not gone ideally, but I guess you can read the message, right? So, the rhetoric triangle is essentially what my book is around. And the idea is that if you have an imbalance in those three elements, then you may have difficulties getting back that trusted reputation. You may have difficulties transferring that message that you want to bring outside. And so the key question is, where did banks go wrong? And very often they have failed in one or more of these areas. The fact that banking is so complex and in a constant transformation obviously didn't help. But today we have an opportunity to learn from the lessons from the past, as we're all doing here today, and to evolve. Digital transformation has for long been a top priority, but mostly a way to keep up, and that made us lose sight of our core purpose, values, and mission sometimes. Every bank defined purpose at some point. And I know, I worked in a bank before, we did the exercise, next day we went back to the office and we did whatever we used to do, day to day, not really thinking about why that bank is there doing the things that it is doing. And so my book is a call to action. To go back to the basics and discover what sets your bank apart. Not just copying what others do successfully, but truly thinking what differentiates your institution from another. I think that's a very general lesson. That's not just limited to banking, can equally be translated to fintech as well. And not a hollow corporate exercise either, because it's a commitment, one that benefits society, the employees, and the customer, and ultimately the bank's bottom line. But more on that later, because first I want to give a few examples, and then we come to the Greek financial crisis and the Polish-Swiss mortgage loans, for example, to explain you how tough it is to rebuild that ethos, to find that new ethos. And I agree with the person that said the Polish mortgages is a thing of the past, but at a high level, very often, quite a few of those Polish banks are still traumatized by it. And that's what I learned at the first speech I did about ethos in banking, and it was at the conference of Miguel Grella, who did a panel here before. And there, a banker came to me and he asked me, how do you translate that conversation into those Swiss-denominated mortgage loans? And I thought that was a very interesting case because, yes, 800,000 people suffered from it. And yes, banks were to blame, but if you look deeper into it, of course, there was a mismanagement of the risks, but it was a mismanagement that even governments followed at a certain point. After all, who would have thought that the Polish economy didn't grow faster than the European or the Swiss market did? And who would have expected that the Swiss franc was not such a reliable currency back then? But those elements also explain why suddenly this became a big issue and ultimately the banks were to blame. It's just an example of how external that ethos can be. Because the banks very often did it because they believed it was the best thing to do. Those Swiss-denominated mortgage loans provide a better interest rate, and people were able to get a higher amount of money to buy a bigger house. Danske Bank once was a symbol for the Danish economy. They helped the economy flourish with a lot of emphasis on agriculture and export. Yet, certain moments, they had a 200 billion case of anti-money laundering against them. And I agree, pretty criminal crime. But if you dig deeper into it, you see a combination of language mistakes, Danish versus Estonian. You see risk management failures, and a complete failure of control mechanisms towards seemingly unimportant branches. Logos was clearly not in order, but it was perceived so small that they didn't see a big problem in it. A very small detail that completely devastated trust in that financial institution. The Greek crisis is another good example of how external factors define how banks are trusted. The fact that Snappy was sitting here earlier, and I mentioned Snappy in my book as well, was probably because a trauma from the past, in this case the Greek financial crisis, led to opportunities for new players to fill the gaps that banks have left. Banks ended up traumatized after the 2008 crash and were much less willing to provide loans, etc., creating a financial exclusion towards people that should have had access to credit, bringing debt servicers from the shadow banking circuit taking part of the gap, but also new neobanks that are currently bringing much more competition and fresh air in the Greek market. And the last example to explain you how quickly trust can go these days is Silicon Valley Bank. It was a bank 40 years old, valued up to 200 billion, and they had a very strong reputation. They knew who their clients were, and they did everything for those clients, startups and tech companies. A sector that was getting much more money than they were spending, based on growth, but not on a sustainable business model. All that changed right after COVID, because suddenly interest rates went up. It was much harder to get new funding. As a result, a lot of outflow of money, and unfortunately the bank miscalculated its balance sheet. As a result, they had to sell a lot of low-interest government bonds at a discount. And once those discounts were realized by the market over social media, the message went out rapidly. In a couple of days, the bank was bankrupt. Why I added this is also because very quickly, even though it was 15 to 20 years after the global financial crisis, everyone thought, there's a new financial crisis, there's a new financial crisis. Luckily, it didn't happen, but it does show you how long it takes to build that solid foundation of trust. So going back to my question, how can we rewrite the narrative in banking? Or can we? I believe we can, and Niccolò Poli, who was Head of Strategy and Sustainability Europe at HSBC, and joined us a couple of times as well, he completely agreed with me. And there are good examples that demonstrate this. We have banks with very powerful digital propositions that get new customers that are willing to pay more for those exceptional digital propositions, like a Revolut and like probably quite a few others as well. We have banks with a very strong sustainability proposition that do exactly that, and bank customers that feel a link with those values that will join that bank and are willing to pay more for exactly those propositions, if you do that well. A strong ethos is a strong brand, but also a strong loyalty, which brings a high employee and customer satisfaction, since everyone knows which way to go. Strong sense of purpose fosters loyalty among customers and employees, and that enhances reputation, which in the long run will also lead to better business performance. There are many examples of that, and a few are also described in my book. Now, obviously, we can't rewrite the narrative in banking to focus on the well-being of society and the planet without considering digital transformation. And unfortunately, we often still make the same mistakes again. I heard a couple of times here. We have been focusing so much on efficiency, 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 which is very relevant, but it also is something that never creates a wow effect. So if as a bank, you want to be there to realize dreams, you should do better. Because as someone reminded me in the workshop I did at noon, from the chief client officer of the Volksbank in the Netherlands, digital is a dissatisfier. If we're just doing digital, we keep people do their banking in a digital way until things go wrong. And the only emotion they feel is when things go wrong. Because when everything's going good, it just works as designed, nothing more. So my key question is, and I think today, digital is in the bank's DNA and we can do better. The technology will allow us to do better as well. We should add more empathy in the process and also use technology like, I'm going to use the word once, AI, to also better understand the customers. And maybe, hopefully, one day, instead of thinking about segmentation, talking about the customer. Because every customer is unique, and today we start to have the tools to treat all those customers for what they're worth, being a person, not a segment. I brought an example of KBC, and this is a pretty old quote, 2020. And Karen van Hoeken, General Manager, Transformation and Data, she said, the more you can create the ultimate laziness for the customer without the need to really be there, the more they will appreciate you. It's not about sending as many notifications to get the client, pull the client back in, etc. But maybe the ultimate dream of a bank should be to be the financial assistant that's only there when the customer needs it. And maybe we should also look at digital in a way, not rule-based notifications, but be a true virtual assistant. I'm a client at KBC, and I use KBC for my financial services, but also for my parking services, for my public transport services. And my favorite football team, if they score a goal, I can see the rehearsal in my bank app. They go that one step further, and I'm more than willing to pay a bit more to be a client that dares to enjoy those digital services. Another trend, sustainability, less on the fintech agendas these days, but it remains a very challenging topic in financial institutions too, because the regulations are enormous, and if we just look at it as a tick-in-the-box exercise, it's cumbersome. And you won't be able to explain to your customers why you need it except for the regulator demands it. But maybe if we treat it slightly differently, we can also use it as a way to understand the customer better and to truly hear what he's willing to invest in and how he wants to make a better planet, or maybe not. A good example of that is VDK Bank. And what's interesting is that at our conference in 2023, they brought a triple-sided coin, approved by the European Central Bank. I think they only have like 100 of those coins, but the idea was to make the people aware, to triple their thinking. And that was a conversation starter with societal associations, but also customers, to tell them that if you bring the money to us, we'll make sure that that money will contribute to your wallet, but also the community and the planet. And what I think is, Leen, she's the CEO. She's the one who joined us. She's very vocal in defending the interests of the banking industry, respecting all stakeholders involved. For me, a very good example of leadership, Ethos. When you look at the sustainability agenda, they list all the companies they invest in on their website. That way, raising the bars for others to do so as well. Logos. And they're also one of the few banks, probably in Europe, that are still opening more branches because they want to be close to their clients. And that can be a strategic choice. We don't need to be all going more and more digital. Perhaps we need more of those physical touch points as well. Empathy, pathos. Maybe one last example, a more local one. That's Erste Bank, founded in 1819 by a priest and a couple of nobles. It was a bank that opened the doors for the average man on the street. They democratized banking, offering savings and credits, and were run by volunteers back then. Today, it's a stock-listed company, and they consider their mission more than shareholder value creation. And we had a couple of conversations with Peter where they explain what they're doing, and that's very interesting. Loyal to their old foundations, they are still working with Erste Finance Holding on improving the well-being of society, respecting a couple of rules. First of all, the new projects, they need to have a societal impact. The activities they develop must be linked to existing businesses but may not overlap, so it may not be competition with existing business lines. And then third, it's not a charity. It needs to create a business case. And that's especially relevant, I think. It's more than just a marketing story. And they worked out concepts, products and services, like, for example, microloans, also working on financial education, both with children and people at risk of poverty, with the ultimate goal to improve employment in the local regions, but also entrepreneurship, and to bring people that are at risk of poverty, that may not have access to banking services in a regular circuit, to bring them back to that regular circuit at best. And the idea is that if we help them now, at the moment that they need it the most, they will be much more loyal when they are capable of going wherever they want to go. So in line with the rhetoric triangle, the question remains, can we rewrite the narrative in banking? And I see that I'm running out of time, but small anecdote, after handing in the manuscript, there was the election of Trump, and suddenly ethics, values, diversity, sustainability came under scrutiny. And I wondered, is it still useful to write that book? Now looking back, I think it's more relevant than ever, because we are also getting back in a new wave of consolidation in the banking industry, and that brings us to much more short-term thinking. And if banks want to be the trusted institution, that is not the way to go, according to me. And an interview by someone of National Bank of Belgium confirmed that, who told the journalist that profitability of banks today is still much more based on pricing rather than scale. And that's also the reason why we still keep having these smaller institutions. And maybe that scale isn't so important after all. So if banks want to be truly trusted institutions, they must remain consistent and committed to their core values in the long run. If we want to create a new ethos in banking, to focus on the well-being of people and the planet, perhaps we can get some inspiration from Mary Poppins, as the CEO of BNP Paribas Fortis shared. He's also the chairman of the Belgian Banking Federation. What he said is that Mary Poppins, she efforts herself for the children. That's what banks should also do for their clients. But more than that, if we are here to realize dreams, perhaps we should spice it up with a bit more magic than what we're doing today to make sure that we can do so. And lastly was, I thought, a very anecdotal one. Whenever journalists want to talk to us, the banks, they're always talking about numbers. But maybe we should add a bit more humor in the conversation again, not just to bring a different narrative, but also to get much closer to that audience that we want to appeal. And that is, I think, exactly how we can build that new ethos. So yes, we can build a new narrative. And my call to action to all of you is to write your own story, carve it into stone, and make sure that you add that story, that you bring that story in your day-to-day actions. Let it be part of the strategic decisions that you make, because that's essentially, for me, what ethos is about. Translating everything you believe in and what your organization believes in the day-to-day work, promises, products, services, operations, whatever. Some call that identity, others call it culture. I call it ethos. Thank you very much.